and David Bahnsen joins me for the hour. David, according to the Wall Street Journal, the White House is narrowing the range of tariffs. The administration may delay plans to place tariffs on cars, microchips and other industries. That seems to be inspiring a market rally. What say you?
Yeah, I think there's a little relief that it may not be as bad as been feared. And so the downside risk is that you get to April 2nd and there's still a lot of uncertainty. More than good news and bad news, markets just want certain news. I think we're going to get to April 3rd and still not know exactly where we're going. But if it's less than it had been feared, that's a good thing. That's what you're seeing in futures this morning, Stuart.
Big picture for a second, David. With American business facing all kinds of challenges, political, economic, and what have you, what's the way forward for American business?
You have to get the tax cuts passed. You have to get the 2017 tax cuts made permanent and get some additional tax relief. The deregulation, the energy policies, the tax side are the three strengths of this new administration. I was with the Treasury Department in D.C. last week. They're focused on that. I'm excited for that. The tariff issue introduces complexity, uncertainty. You don't want total trade going down. It's not good for American workers. We got to get on the other side of this stuff, Stuart.
Got it. David, stay there with me for the hour, please.
But my point was they're all mad, and I, said something I didn't, probably shouldn't have about a company.
Okay, David Bahnsen, what do you make of Walz's, I'm going to call it a half apology?
Yeah, I'm kind of torn because I don't mind people joking around and so forth, but I also think he wasn't really joking, but now he realizes it was unwise. Look, you don't want to root for a company to be going down, but he's allowed to have strong opinions against Elon Musk. That doesn't bother me. It's a free country. We know they're politically divided, but I think that when you're rooting for a stock to go down, it's other people who own the stock. You're kind of rooting against them, their 401ks, their IRAs. So it's a bad look, but it's not something that's going to keep me up at night.
The most successful electric car company in the world, bar none, and he says vote against them and take the stock down.
Yeah.
Just not. You shouldn't.
No,
be doing
I understand.
That.
I agree.
Not be doing that.
You shouldn't do it, and he did walk it back.
Yeah.
I'm just trying to give him a little benefit of the doubt here.
Keep you smiling, David, somehow or other. United Labs. Okay, what was the deal for, and how much was the deal for?
$2 billion for a weight loss drug.
Does David have any comment whatsoever on Novo Nordisk?
Well, they're going to be competing with themselves, but I agree that's probably what they need to do is acquire more while they have this very high stock price, because it's definitely a one-drug company right now.
What's Wedbush saying?
It is their best ideas list, right? So listen to this. They say that IBM is well positioned to capitalize on the current demand shift for hybrid and AI applications as more of these big, large enterprises are looking to implement AI to help drive efficiencies across the board.
What do you got against IBM?
I pick it all the time. It's one of our biggest holdings. We've owned it for years. We've more than doubled our money. And when people call it old tech, I laugh because they don't realize they had $1 billion order flow for AI a year ago. They have $5 billion now. Their cloud hybrid play from the Red Hat acquisition has totally changed the company. And, oh, yeah, by the way, they still make a fortune on the old tech business. IBM is a wonderful American company.
Do they pay a dividend?
They pay a huge dividend. For us, the dividend's about 10% per year from what we bought the stock for. Right now, new investors are still getting almost 4%, and it's growing 8% a year.
Back to Bahnsen and his dividend picks. Pepsi, again?
Well, yes, Pepsi and these consumer staples that have not been rallying a lot, that are making a ton of money. And then Pepsi did an acquisition last week for another soda company. They have the ability to buy without having to add to debt. I think they spent about $1.5 billion. It's a wonderful deal. Pepsi with bottled water, snack is just a great diversified play, grown the dividend every year since World War II.
And what do they pay right now?
3.75%.
And it's growing all the time?
All the time, every single year for 70 years.
Okay, now here's another one that you brought us before. Pronunciation, Lyondell-Basel.
Lyondell-Basel, and it is a little hard to pronounce. 7.5% dividend. That's not hard for you to pronounce, 7.5%.
I got it.
But more important to me is that it is growing every year as well. Huge petrochemical company doing, and now look, with tariffs and trade war, it's going to be volatile, but that's what we like, because you have a chance to really buy a wonderful company, makes a ton of money, manages their balance sheet well, and you can buy it during volatility.
There's not many companies paying 7.5% on a regular basis, and it's secure. You just don't find them very often.
No, and this is very solid. Is paying it 100% from free cash flow.
Got it, David. Thank you. David Bahnsen, what do you think about withdrawing the Fed income deduction on the interest?
I think Steve alluded to the better way to do it, which is just have a flatter marginal rate. But see, first of all, you have hundreds of billions of dollars of muni bonds out there that people bought with the expectation of tax freeness. So you can't, that has to be sunset. On a go forward basis, the problem he's alluding to is people are spending too much money. The state and local bond issuers need to stop doing it. And the voters keep voting for it. That's the issue. So I think it's a little too complicated to just say yay or nay, but I do support a flatter tax rate.
Oh, don't we all? All right. Thank you, David. David, is now the time to invest in defense, or is it too late?
No, it's not too late. There's still a lot of good opportunities there, but you have to be careful. A lot of the defense companies are also aerospace or making airplanes like Boeing. It's a big part of their business. Commercial air travel is a different sector. So we prefer the more pure defense. And I love what he just said. It's a great point. It's not just U.S. beefing up its own defense budgets. Europe is a big customer of what a lot of these companies are buying.
Do any defense contractors pay a big dividend, a rising dividend?
Lockheed Martin is a great dividend grower. It's been in our portfolio for several years.
Got it. Thank you, David.